Welcome to the Don Harkins Real Estate Show. I'm Don Harkins. Today we're talking about real estate versus Bitcoin. Obviously, real estate is time tested, builds generational wealth, very predictable asset, a lot of tax advantages. Bitcoin's seen explosive growth, has an incredibly loyal fan base, wild volatility. So if you've got some money sitting aside, or you're about to come into some money, or you're thinking about changing around your investment structure and you're trying to figure out, should I put this money into real estate or should I be looking at cryptocurrency? I'm going to talk about a few points with regards to real estate that I think should swing the pendulum in that direction. Obviously, if you are a avid supporter and a diehard cryptocurrency or Bitcoin fanboy, I'm not going to change your opinion. I'm not here to change your opinion. If that's where you are on this side of the fence, that's fantastic. I'm glad you have confidence, and I hope that that continues to grow and make lots of money for people. But if you are on the fence, you're a little bit nervous about putting your money into cryptocurrency, and you're trying to decide if real estate might be the better option, then I'm hoping to provide some clarity to that discussion or that thought process and let you know kind of where I stand on some of these things. So, welcome to the Don Harkins Real Estate Show. We're here to help consumers, realtors, lenders, and property managers navigate the complex world of real estate, and together we'll uncover the deceptions and misconceptions propagated by some of the most well-known names in the industry. We'll uncover myths and tactics that can unfairly target both consumers and real estate practitioners. We're going to tackle real estate topics that matter, including introduction to real estate investing, negotiation secrets, marketing for brokers and agents, market analysis and pricing strategies, property management fundamentals, and how AI is transforming the real estate world for agents and investors. Beyond exposing industry myths, we're going to dive deep into strategies and insights that empower you to thrive, whether you're buying your first home, managing a portfolio, or growing your real estate career. I own two real estate brokerages, one in Central Florida, another on the Space Coast, and those are focused on traditional real estate sales and leasing. I have another brokerage that I own that focuses on long-term property management for absentee owners and investors with portfolios of all sizes. And I'm also a licensed mortgage originator where we provide clarity, speed, and stress-free solutions for home buyers and realtors. And we originate conventional VA and FHA loans. So diving into the world of Bitcoin, you can see some Bitcoin worshipers here worshiping a coin. But in all reality, I'm hoping that this doesn't really fuel a bunch of outrage and reality. It's just a compare and contrast. And I'm not here to change anybody's mind. I'm just here to help someone make a decision if they're sitting on the fence. So we're going to go over some of the differences here of real estate versus Bitcoin. And the first one being that real estate is a tangible asset. So starting with something really simple, the idea of owning something that you can actually see, touch, and use. That's real estate. So when you buy a house, a piece of land, a commercial property, you're acquiring a physical, real world asset, like a 3-bedroom house in Denver. You've got options. You can live in it. You can rent it out for income. You can sell it down the line when the value increases. But either way, it's here. You can hold it in your hand. It has inherent value because it's a necessity for people. When you compare that to Bitcoin, the fact that real estate is a tangible asset, well, when you buy Bitcoin, you're purchasing something that only exists digitally. It sits in your digital wallet. Its value depends entirely on market sentiment and the infrastructure supporting cryptocurrency. So if people lose confidence in Bitcoin, or if technology advances and makes it obsolete, its value could drop. It could drop all the way to zero. There's no tangible utility. You can't live in Bitcoin. You can't rent Bitcoin out, or you can't physically use it to produce something in any meaningful way. So this tangibility makes real estate, I think, a more secure and versatile investment. It's not just numbers on a screen. It's real functional asset that people will always need. So that's a key reason why real estate stood the test of time as a reliable investment option. The second point is that real estate is remarkably tax advantaged. The U.S. tax code was created for landowners. The landowners, the real estate owners had the power and had the money. They created the institutions and they left aspects of those institutions, loopholes in there that uniquely benefit and advantage property owners. So, one of the biggest benefits is the way it's treated by the tax code. When you own rental property, you can significantly reduce your taxable income a couple different ways. So, let's say you're a landlord, you can write off $8,000 in mortgage interest, $3,000 in property taxes, $5,000 in depreciation, $16,000 in deductions. And these write offs lower the amount of income the government can tax, putting more money in your pocket. When we compare that to Bitcoin, if you buy Bitcoin, for let's say for $20,000 and you later sell it for $50,000, you have a capital gain. You can't depreciate your Bitcoin. You can't write off transaction fees. You can't defer the gains. Every dollar of profit is fully taxable. And so it's a huge difference. Real estate investors have multiple tools to minimize taxes and keep more of their money. And Bitcoin investors are just really struggling and facing a straightforward tax hit on their gains. Now, that may change with the incoming, what seems to be pro cryptocurrency, administration coming in, but it may not change. That's still a gamble, but we know, at least right now, that real estate is much more tax advantaged. Going to the next piece, real estate is leveraged. So leverage is one of the most powerful tools in investing, and not all leverage is created equal. So real estate provides a safe and controlled way that you can amplify your returns using borrowed money. So imagine you put $20,000 down to buy a $200,000 home with a mortgage. Over 10 years, the property appreciates to $300,000. You've got a $100,000 gain, not on the $20,000 you invested, but on the entire value of the property. And so that's leverage in action. You're using someone else's money, the bank's money, to control a larger appreciating asset, and it works to your advantage. And real estate typically appreciates steadily over time, about 4% historically. So it's a relatively low risk strategy, whereas a lot of other forms of leveraged investing are very high risk. Now, let's consider Bitcoin. An investor borrows $50,000 to buy Bitcoin, and the price of the Bitcoin drops by $20,000. Not only do they lose the $20,000, but they still owe the entire price of the Bitcoin from the person they borrowed it for. So because it's so volatile, leveraging it can lead to catastrophic and compounding losses, and even in a matter of weeks. So the unique ability to leverage real estate and its predictability really create a huge advantage for a lot of, especially novice or early investors. The next advantage we're going to talk about is that it has utility. So, talking about utility, what can an investment actually do for you beyond generating returns? And real estate stands out here because it serves practical everyday needs. So if you're a family buying a home, it's not just an investment, it's where you live, you raise your kids, you create memories. If you're a business owner purchasing commercial property, they're using it to run their operations, serve customers, generate income. Even vacant land has utility. It can be developed, leased, preserved for future use. So it provides value simply by existing and fulfilling practical purposes. If we look at Bitcoin, its utility is limited to being a digital currency or store of value. A business owner might use Bitcoin to pay a supplier overseas. It's fast and efficient for the transaction, but that's kind of where its utility ends. It can't provide shelter, it can't house a business, or be directly used to create something physical or functional. It's purely a financial instrument. Its utility is purely financial. So, we're really only through 4 points here, but there's an interesting opportunity to talk about the synergy of some of these factors. So imagine a business owner who uses $50,000 as a down payment to purchase a $250,000 office building. And this office serves multiple purposes, right? It's where they run their business. It's an appreciating asset, so it has utility, it has leverage, and it provides tax benefits. So by putting $50,000 down and financing the rest, The owner controls a $250,000 asset. If the property appreciates to say 350 over 10 years, they've gained 100,000 on their 50,000 investment. That's a 200% return on the initial cash without even considering the tax benefits or rental income. Tax advantages: the business can write off the mortgage interest. They can write off expenses associated with maintaining the building, and then the owner can depreciate the building, offsetting taxable income. So, for example, over 39 years, commercial property, a portion of the building value can be deducted annually as a non-cash expense. So, any expenses related to maintaining the property, repairs, utilities, or improvements, those are also deductible. And then let's say the business owner pays himself rent. So the owner's business pays rent to themselves as the building owner. This creates income from the property, but simultaneously funnels the business's cash into a long-term investment and reduces the business tax liability. And then there's tax-free appreciation. You can gain this appreciation year over year over year over year without having to pay taxes on it. You can even eventually do a 1031 exchange and reinvest all the equity into another property completely tax-free. Basically, you can extend that, push off that capital gain indefinitely if you really wanted to. And that's what corporations do. So that's just an example of some of the synergistic qualities of real estate. But moving forward, talking more about Bitcoin versus real estate specifically, we're talking about here, it's real estate not being susceptible to obsolescence from advancing technology, right? What's the risk to Bitcoin? And so we know real estate's really a timeless investment. It doesn't lose value because of technological advancements. A 50-acre farm today will still be valuable in 50 years. Arguably, technology makes real estate more valuable. 50 acres 100 years ago could only yield so much food. Today, 50 acres can yield exponentially more food because of advances in technology and farming and agriculture. So, same with building construction. If you had an acre in New York 100 years ago versus an acre in New York today, the amount of utility that acre has, because you can construct vertically and exponentially increase the rents that acre can yield. The more technology advances, arguably the more valuable real estate becomes. But Bitcoin is deeply tied to the tech world and depends entirely on the digital infrastructure that supports it. And this makes it inherently more vulnerable to advances in technology like the emergence of quantum computing. That poses a significant risk to Bitcoin and other cryptocurrencies because quantum computers have the potential to break the encryption algorithms that underpin blockchain technology. And here's why this matters. Bitcoin relies on cryptographic techniques to secure transactions and wallets. And if quantum computers become powerful enough to crack the encryption, the entire Bitcoin network can be compromised. An attacker might gain the ability to forge transactions, steal Bitcoin from wallets, or disrupt the network entirely. And this would obviously just decimate Bitcoin's value. And blockchain developers, while they're already researching quantum resistant encryption, there's no guarantee that Bitcoin's infrastructure will evolve quickly enough to withstand those challenges. And additionally, if a newer quantum resistant cryptocurrency emerges, Bitcoin could lose its dominance, further diminishing its value. So, in contrast, real estate is immune to all of these risks. A farmhouse, an office building, it's just not affected by advancements in quantum computing or encryption. So real estate's kind of unique that way. Historical predictability. So we've got centuries of historical data looking at real estate value growth. You take housing in cities like New York and London, these markets have shown steady appreciation over centuries. Now, there's occasional dips, but they've always recovered. A residential property purchased in 1980 could be worth as much as $500,000 today or more. So there's real predictability there that Bitcoin lacks. Now, its price history, while it's short and volatile, it has been remarkably high and fast-paced, incredible year-over-year gains. But Bitcoin surged from 10,000 to 60,000 in 2021. And then in 2022, dropped below 20,000. And I mean, that's insane volatility compared to real estate's historical performance. So if you're looking for, high, excitement and adrenaline watching your portfolio, then Bitcoin can certainly provide that. If you're looking for dependability and predictability, you might want to stick with real estate. Moving on, talking about limited supply, and there's capped supply, and then there's absolute limited supply. So real estate is inherently finite. Obviously, there's only so much land on earth. No one can create more of it. And this scarcity is tied to real world needs. So tangible scarcity drives the demand and ensures that real estate is going to retain its value indefinitely. Bitcoin claims to be scarce with a maximum supply of 21 million coins. But this scarcity is digital, not physical, and it's entirely reliant on the Bitcoin protocol remaining unchanged. Theoretically, Bitcoin supply could be increased if the network's governing participants, miners, developers, large stakeholders reach a consensus to alter the code. And while that's highly unlikely and would be insanely controversial, it's not impossible. If Bitcoin supply cap were lifted, it would undermine the trust in the entire system. It would reduce its value, remove the scarcity. So there's some risk there. It's not absolute limited supply. Even if Bitcoin maintains its cap supply, which it probably will, cryptocurrency as a whole doesn't have any limitation. There are thousands of cryptocurrencies today, and new ones are created constantly. Each new coin dilutes the overall market, offering alternatives to Bitcoin, shifting demand. It creates effectively unlimited supply of digital assets competing for attention. That undermines Bitcoin's claim to be scarce, I believe. In contrast, real estate scarcity, it's immutable, tied to the physical world. Value of real estate doesn't rely on consensus or protocols. It's driven by real, tangible factors like population, economic development, geographic desirability. So, big difference there, I think, in terms of supply and scarcity. Moving on, number 8, passive income. So real estate not only grows in value, but it can also generate passive income. You own a duplex, it rents for $1,500 per unit, $3,000 a month, $36,000 a year. And while the property continues to appreciate and grow, just like Bitcoin continues to appreciate and grow, after expenses, a savvy investor can actually pocket significant cash flow. Bitcoin, by contrast, doesn't generate any income. The only way to profit is to sell it at a higher price or take on risk by lending it out or staking it. And we've seen how that's gone the past several years. With real estate, you earn money without selling the asset, and it provides consistent returns. You earn money without selling the asset, and it earns consistent returns while still giving you financial security. Our 9th point, real estate allows you to improve and add value to it. Real estate as an investment, you can improve constantly. You can, a landlord can renovate an outdated kitchen. You can add an extra bathroom. You can increase not only the rental income that it generates, but you can also improve the value that it has. So exponential synergistic efforts there. So you're not only, increasing what the place is worth, but it's spitting off more money because it's worth more. And Bitcoin just cannot be improved. If you could have a super Bitcoin, that would be, you take a regular Bitcoin and then you do something to it, put a little more money to it, and now it's not only worth more, but it spends off money. I mean, that would be insane. But once you buy Bitcoin, its value is completely out of your control. Real estate, on the other hand, it allows you to actively increase its worth and gives you more control over your investment success. The next thing is real estate offers greater diversification potential. So, you can talk about diversification in a couple different ways with regards to Bitcoin. So one way might be, hey, I'm going to own some residential, and I'm going to own some office, and I'm going to own some retail, and I'm going to own some industrial. So I've diversified because I own different property types. You could say I'm going to own some single family rentals, I'm going to own some multifamily rentals, and I'm going to own some industrial rentals. You can also diversify geographically. I'm going to own some property in Brazil. I'm going to own some property in the UK. I'm going to own some property in Canada. I'm going to own some property in the US. I'm going to own some farmland and I'm going to own some apartment building. The ability to diversify in real estate is just absolutely endless and limitless. And Bitcoin lacks this flexibility. To diversify in crypto, you got to invest in other crypto, which often mirrors Bitcoin's volatility. So, I'd be like, well, I own a house and I want to diversify, so I'm going to go buy another house. And I want to diversify again, so I'm going to buy another house. There's just not the same ability to diversify at all with Bitcoin cryptocurrency. And then the final point, a little more nuanced, but really true and surface level. Real estate's well established, widely trusted. People understand that land and buildings have inherent value. And Bitcoin is just universally less trusted. A lot of people find cryptocurrency confusing. They worry about the volatility. They worry about the lack of regulation, the changing legal landscape, and what the future of it's going to look like, the security. So, real estate has an advantage there in that it's just more trustworthy. And it's not just about trust, it's about the ability to sell and transfer and about the desirability ultimately, right? Trust is big in my personal business. Like we know we have to build trust with people before they will call us and use our services. And just same with investing, people have to trust something before they can invest in it, even if they like the return. So we think that's a advantage for real estate over Bitcoin also. So those are the 11 points. I think the 11 advantages that real estate has over crypto. You could do an entire other video, an entire other segment about the advantages that Bitcoin or crypto have over real estate. I'm not a Bitcoin or crypto expert by any means. I probably know more about it or less about it than, the average 13-year-old out there. So, if you're an expert and you have really strong convictions and you're heavily invested in crypto and you've done very well with it, then I applaud you. That's fantastic. And I'm not here to tell you that your investment wasn't a good investment or you're any less successful or wealthy than the next person. Again, my advice is if someone is sitting around and they have $20,000, $30,000, they're looking to make their first investment, or they have $150,000, $200,000 they just came into, and they're trying to decide, where am I going to put this money? What should I invest in? The purpose of this video is to say, if you're not too sure and you're kind of weighing crypto for the first time versus real estate, our advice would be go real estate. I think those are legitimate advantages and reasons you should be investing in real estate if you're on the fence. So thank you for watching. Really appreciate it. Please be sure to like and subscribe. If you're watching this video on YouTube, hit the subscribe and the notify button. If you're listening to this video on podcast, or you're listening on podcast, please leave us a review. Be sure to give us a like. And if there's anything we can help you with in Florida in terms of owning real estate, buying or selling real estate, leasing out property, making your current properties more profitable, accessing financing for real estate, we do it all. I'd be happy to chat with you. I'm Don Harkins, at Don Harkins on most social media. And thank you for watching. Have a great evening.